Bronx. Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really happy to have with me a longtime friend and fellow traveler on the investment circuit, Peter Grandich. And I first met Peter about 30 years ago. He was a most unusual person from the start, having not even a high school education. And he did have, Peter, if you talk to him, he's one of these D's, Does, and Demers guys. He has this heavy Bronx accent, and let's just say he wasn't the typical guy that you find working on Wall Street. You know, the guys with the Ivy League degrees and strutting about and, blonde-haired, blue-eyed guys. He had just correctly, however, in spite of his lack of education, forecasted the stock market crash of 1987, and somehow just one day later had the insight to suggest the stock market would go back to new all-time highs within 2 years. He predicted it, and it happened. A prophet, you might say, of sorts, because by the definition of a prophet is someone who predicts something and it actually happens. Well, this and other accurate forecasts led him to being widely seen all over the national media. He was on television quite frequently, into the international speaking circuit, and that's where I met up with Peter over the years in Vancouver and Toronto and San Francisco and other major cities in North America. Peter would become recognized for his expertise in metals and mining, and he managed some hedge funds and even a mutual fund that bared his name, and he specialized in mining and metals shares. But unlike most people that I met in the many years of this business, Peter could be both bullish and bearish on the markets. In fact, I would sometimes sit in on Peter's talks, and I'd say, "No, Peter, no, that's not what I want to hear. Don't say that." And I knew Peter well enough to know it wasn't necessarily what he wanted to hear, but he was always objective, and he would tell you what he believed, even if it wasn't self-serving. And that's one of the reasons that I've had a great deal of respect for him. Peter's had his own issues, his own demons, you might say. I've had mine as well. We all have issues in our lives that pose difficulties. He had panic attacks and suffered from depression and at the point of hospitalization at one point. And I remember Peter struggling with some of those issues in Vancouver on one time specifically. But through all of that, the good Lord shaped a good Christian man. I feel confident in saying that, knowing Peter as I do. A few years back, he felt that he was being called to give up his fame and fortune on Wall Street and focus solely on Christian-related work and recreation. And he has been deeply involved with Christian sports ministries, having served both the New York Yankees and New York Giants for 13 years, doing Bible study and chapel with them. He sits on the national board of Catholic Athletes for Christ, and now focuses all his business interests in the world of retirement, business, and estate planning in an absolutely lovely New Jersey, forgive me, Peter, shore town called Spring Lake, and it's a place I know Peter's invited Mrs. Taylor and me to go to. We just haven't gotten to it, but I'm hoping to sometime this spring. And I noticed Peter speaking most enthusiastically recently about gold in a blog he still writes for his clients, and knowing his past track record in that area, I asked him again to come on today, and I'm especially excited to talk to him today because, well, they say a broken clock is right twice a day, and I've been one of those broken clocks that have been bullish, a perma-bull on gold, and now when Peter's coming around to saying he's bullish on gold, well, maybe I've just got it right again. Thanks for joining me again, Peter.
Jay, it's an absolute honor and a privilege, and I could use one hand in 30-something years of people that I would say that I would go and see without question, and you're one of them, so it's always a pleasure to speak to you.
Thank you, Peter. Well, you put out a missive this morning saying that I'm trying to keep my word to discuss financial markets more without falling into the trap of my yesteryear lifestyle. Maybe I sort of, in my introduction of you, alluded to that, but talk to us a little bit about that, and how do we, it's a very tempting world we live in, and how can we keep on the straight and the narrow? How can we keep balance between the necessities of life, doing what we need to do, and avoiding this sort of desire to be rich and famous and powerful that are temptations that I know I've faced in the past. How can we keep on the straight and narrow, I guess?
So if we were able to do it and do it without ever failing, then there would have been no need for Christ to come and die on the cross, as far as I know you and I are at least concerned. So
sure.
we are going to fall short of that, and that's one of the many reasons what took place at the cross occurred. For me, at the end of 2013, I made at the time viewed a difficult decision, but now I fully understand why, to leave the world I had grown accustomed to, the metals and mining industry and consultant work on that, and as you noted, focused in a very small segment in a much different type of lifestyle. I stopped any and all advisory service or handling people's finances in any way, except I maintained an insurance license and am part of a group, and if people do some sort of insurance, I get compensated that way. But that was certainly a dramatic change for the previous 25 or so years before that. And now into my fourth year, I found myself at the latter part of last year falling a little bit back into the old trap of talking about markets again and even tempting to trade them again. And I feel I caught myself, and certain spiritual things happened to help me catch myself. But I found that when I did fall back into that trap, a whole bunch of people I hadn't heard from in a long time who were following the blog wrote, "Hey, I'm so glad you're doing this and hope you could do this more," and this, that, and the other. And so I felt I met them somewhere, and I don't know if in the middle of the road, and said that I would certainly comment more than the odd time that I had been for the last few years, but please don't expect expectations to be an advisory service again or anything of that nature. And so, as you noted in a commentary this morning, and certainly over the last few months, I've been very keen on what was happening in the gold market. And again, unlike 3 or 4 years ago when it could be viewed that there was prejudicial reasons because I was representing some public mining companies or what have you, or, as you said, peering at a mining show where, many of the other speakers were, always one-sided. There is no prejudice here other than my own personal investments, and there's no way that me speaking about this is going to move my personal investments and have an impact on the market. But nevertheless, I have to say, Jay, that I don't remember, although at our age now, memory is not the easiest that we once had. But
tell me about it.
What I can recall, I guess that's the way to say it, is that I never remember feeling more bullish than I do now on gold. I really think a lot of things have come together, Jay, at a time. And the first, and then I'll pause, and whatever questions you have, I'll be glad to answer. I think the first most important thing is probably something that even people that may share our view that are listening don't ask themselves. And I think this is the first and most important thing about why I'm bullish on gold, and that is no one's asked the overwhelming number of so-called experts and financial journalists who for the last few years have written more bearish articles in that time frame calling for the end of gold, for it to be substantially below 1,000. It's a relic. It should never be owned. All the stories that you could Google and see that have just been written in the last 2 or 3 years. The first thing we need to ask is, what did they get wrong? And what else could go in supposedly their favor to help them achieve what they felt should happen, and yet it's going in the opposite direction? I think that's the single biggest bullish factor. And the way I like to compare it is, because, as you noted, I've been so involved in sports, and you don't have to be, and if you're just a fan, that it's kind of like you've watched this game where at the onset they talked about one team really shouldn't be on the same field. They just don't measure up. They really are an inferior product, so to speak, but somehow it's the third and fourth quarter, and they're not only in the game, they're about to take the lead, or they've taken the lead, or in a boxing match where one is so much more dominant that no one expects it to go more than a couple of rounds, and suddenly find ourselves in the 11th to 12th round, and that person that had no chance is actually winning and knocking around the champ. And that's what I think has happened with gold when you compare it to what the world has certainly advocated for the last few years, financial assets, that despite all of that and all the things we're told that aren't good for it, a rising dollar, rising interest rates, interest in equity, so-called a man that was going to come in and solve everything in the United States, and the world problems weren't really something to be worried about. Yet here we sit today, and as we talk, gold had another great up day, and financial assets aren't, having the best of the day. So I think there's a lot more, but I think that's a good start for a reason to be bullish on gold right now.
Mm-hmm. Well, I would just make a couple of comments based on what you just said earlier, Peter, about not being biased now. I don't think you ever were that biased. Sure, you wanted to see the companies that you had an interest in do well, but I think that may be one of the reasons you struggled with depression, is this conflict between knowing what was right and wrong and being forced out of your own conscience to say things that weren't necessarily what, if you were trying to get people to buy the stocks of companies that you were involved with, it wasn't necessarily the right thing to say, but you said it anyway. I can remember when you turned bearish on metals and you say, look, this is the way I see it. I think equities are going to be stronger for a while now, and I don't think gold is looking particularly good. I remember you saying things, and I said, no, Peter, I don't really want to hear that, but you said it anyway. The other thing I would say is that you have a gift, and I think God wants you to use that gift, Peter. And if you have a sense, a street smart sense of what's happening in markets that allowed you way back when you first when you first became known in the markets, for a sense of what's going on in society. I mean, you've made this comment about how Americans have to hang on to everything and go hire storage space, and what insanity. And I think the way we live our lives, we run around like madmen trying to make more money so we can buy more stuff that we never use or never need, and we have to then put it in storage units. So I think in a way what you've done is come back in your own life to a more simple life, a life in which you're happier. But it is still, I agree, it's a constant struggle to maintain that sort of modesty or lifestyle that will allow you to be who God created you to be, I would say. So, but at the same time, you have a gift, and you probably should be using that. And to the extent that you can opine and help your readers understand understand your views of the markets, which are worth listening to. I must say, I always enjoy listening to them. But let's talk a little bit about this equity market, because and Michael Oliver, who was on with us just a few minutes ago, really believes that we're getting close to a major decline in equities, and he's turning very bullish on gold, and his views on the dollar too. I mean, he's looking at the euro, which is breaking through, very near breaking through on the upside, which is very bearish for the dollar, given that 57% of the index is the euro. What are your thoughts on some of these markets now, Peter? Just opined on gold. You believe gold is very, very strong. What about some of these other markets?
Sure. So, real quick, just to address something you just said, it was like the Holy Spirit just speaking to me through you, Jay. You're right. One of the difficulties for years was a feeling of sense of over-responsibility, even though I knew most of the companies I worked with were not likely to be successful, and I try to make that as clear as possible. There was always that struggle internally. Mm-hmm. I couldn't turn it off, and you're correct. But finally removing myself from it really gave me a sense of peace that didn't exist while I was doing that. And, mm-hmm. and two, you're also right, and that was even the more larger argument that came, that people kept saying I wasn't using the gift that I had, that I got away from, to where maybe once a month I might have said something very little bit about the market, and people said, Pete, why don't you go back to at least once a week? So it just knowing the Christian man you are, and knowing the interrelationship we've had for 30 years, I have to tell you this has been one of the most enjoyable conversations, because I know God used this conversation, Jay, to speak through you to me. So I just wanted to tell you that publicly. Now, to answer your question, I took the most unusual move about 2 weeks ago. And again, strictly for myself. I don't have anybody's self-interest but my own. but I do note it for those that care to know about it. And I actually shorted the market, and it might have been only the third or fourth time. So I concur with the gentleman that you spoke earlier. I think the market is in a very dangerous, precarious position. I had stated last year there were three things driving the equity market, and until at least one of them changed, it would probably likely still go higher. The first was the unbelievable amount of paper that was being created out of thin air through these quantitative easing programs, not only here in the U.S., but around the world. There was just so much money being created and sticking in Wall Street and not going to Main Street. The second was chasing yield. With the baby boomer reaching retirement age, there was such a quest and thirst and a need for yield, and because of what happened to interest rates, so much of that money started to come into the equity market in higher risk dividend paying type stocks versus bonds. And then third was which the first two helped create, was this only game in town mentality, that there really was no other place to invest. And those were the three things that I argued was propelling the market higher. Well, I think at least one of them is cracked. I think the Fed has moved somewhat away from that, and we're likely to see soon the European Central Bank move away from a totally accommodative flood the markets at this point in time. The second thing, I think much of the chasing the yield is over. It's been exhausted. That money had put into use, and the problem now is that it's very hard to sustain equities from general fundamentals, no matter how you look at them, whether you use the Shiller Cape Index, which suggests some overvaluation unseen except maybe in 29 and one other bad time. If you look at all normal ways of valuation, you can't make an argument to and buy a bunch of general equities and certainly bonds. I even said, and didn't realize there was still actually a few people listening to me, I told in a previous comment from a week ago that how anybody can go out and buy a Bundesbank yielding 0.4% and not think it's a screaming short. Well, people were starting to email me, should I short the German bond? No, I don't want people to do that. But we've come so overswung to one side of the pendulum. It's basically 180 degrees from where you and I first entered. I know you entered a little earlier than me in the mid to late 70s. I entered in the early 80s. But if we went back and read and thought how everybody was thinking back then, we're about 180 degrees different. Then stocks were dead. You had to own gold and all these other things. Now it's swung the pendulum, I think, as far as it can to one side. And when it starts to swing, it's not going to just swing a little back. It's going to swing for a long time. I think when we do finally cave, and we cave in a substantial wave, I don't think this time there's anything that will drive it back up anytime soon. I think for a lot of years, at least as long as the good Lord is probably going to have for you and I, Jay, left on this earth, that we're not going to see another general equity bull market in our lifetime.
Well, that remains to be seen, but the hourglass, the sand in the hourglass is running down. I will have my 70th birthday this Saturday, Lord willing, and so we know that our lives are finite, in at least as they exist in the four dimensions of time and space, and that's a reality that we have to reckon with now. We're out of time. Peter, thank you very much for your insights and sharing your personal testimony with us today. It's always good to hear from you, and we'll look forward to doing it again sometime in the near future.